Hello folks, in today's video I want to talk about two of the most popular trading platforms here in the UK. One is Vanguard, the other is Trading 212. Both very different, but in many ways very similar. So I'm going to have a quick talk about the different pros and cons that I found using both platforms at the same time. I'm going to talk a little bit about why you might want to use one over the other, or sometimes a combination of both. Stay tuned. Hi folks, of course I am David from prettypenny.club. I make videos to help you reach your financial goals with content on frugal living, investing, passive income, generally trying to make your money work harder for you. Subscribe if that sounds good to you. Alright then, but just before we get into this video, folks, I just want to tell you about what's coming up in February. I've had a ton of people asking me for more content on the frugal living side of things, making a little bit of extra money, food challenges, saving some money, all that kind of thing. So we have dubbed February Frugal February, and that's where we're going to direct our content coming up this month. So there's going to be a couple of frugal challenges in there, but we all know you can't frugal your way to wealth, so we're going to be talking about different ways you can make some money during lockdown in particular. I'm going to be talking to a young lady who set up her own jewellery business right in the thick of lockdown and is doing really well. And of course there will be a little bit of investing content, but we're going to try and move away from that a little bit in Frugal February. So if that sounds like the sort of thing you might be interested in and you're not already subscribed, feel free to hit that subscription button, notification bell, all that good stuff. And finally, we are relaunching the Pretty Penny Club Instagram page. Mrs. Pretty Penny is going to be looking after all the visual content and stuff that goes on there, so it will no doubt be a lot more worthwhile than this particular channel, since someone who knows what they're doing will be in charge of it. So if you're interested in Instagram and you're on Instagram, make sure you get along there and follow. We're going to be posting some content up on that too. So that's it, that's the news. Frugal February coming up. Thank you for listening. Let's move on with the video. So I've often been asked in the comments why it is I use Vanguard at all when everything I invest in Vanguard is actually available in Trading 212. And it's a good question, and it's a very fair question, because on first glance it would look like I'm just leaving money on the table, as I'm paying Vanguard 0.15% for the pleasure of using their platform, and on the other side of the coin, Trading 212 have zero fees, at least for the product that I use. So it set me off on a bit of a whirlwind adventure comparing Vanguard and Trading 212. I properly went down the rabbit hole, and in this video I want to talk to you about what I've found and why I might even ditch Vanguard completely. But just by a little bit of history, Vanguard was the first platform that I used to invest in any kind of serious manner. I'd heard so many good things about the platform from other investors and people that I'd spoken to, and when I actually went to try them out, I found the website really easy to use. It was very easy to get started with some index funds, and the fees were really low. And all this really just added up to some good passive investing where I could throw some money into an investment account and just let it sit there and let the markets do their thing. And since I was on Vanguard, I started with their life strategy funds, exclusive to Vanguard, and they looked to be a nice mix of equities and bonds, and you could set your sort of target retirement dates and all those kinds of things. It just looked like a nice platform to be using, and one that wouldn't really need any sort of hands-on effort at all. But nothing stands still for too long around here, and very soon Trading 212 and Free Trade, among other phone apps, really started to come to the fore and offer investors a serious alternative to the incumbent companies. I was pretty intrigued with what I saw, tried them both and settled on Trading 212. It seemed to be a bit of a much more mature app, and it had a full website as well you can go and use if you're so inclined. And Trading 212 offered a pretty good experience as I started to branch out into other forms of investing away from Vanguard's index funds. And that is essentially the key difference between the two platforms. Vanguard only offers its own products to invest in, whereas Trading 212 has a wide variety of individual stocks and shares, as well as other ETFs and products from other companies. Now, you won't have the full range of Vanguard products, but certainly all the ones I'm currently investing in are available on Trading 212. And this is where the seeds of doubt for Vanguard started to come in. My ISA, as I've said before, is held with Vanguard, and so anything that I make or any profits that I gain in Trading 212 are going to be subject to tax in the normal way. So wouldn't it be a better idea if I took all my investments from Vanguard and put them into Trading 212 and held them all under the same ISA wrapper? It certainly seemed a good idea on paper, so I decided to dig a little bit deeper and see exactly what I'm getting from a 0.15% versus free on Trading 212. So let's look at their business models first. Let's see exactly how these companies are actually making money. Well, Vanguard have been in business since 1975. They've got over 30 million accounts and they're managing $6.2 trillion in assets. Those are pretty good credentials, and being in the UK, of course, they are regulated by the FCA and backed by the FCFS, which of course for anybody that doesn't know guarantees your deposits up to the value of £85,000 per account. They make their money from charging a platform fee of 0.15% up to a maximum of £375 on accounts of £250,000 or greater. They obviously charge a little bit of money, somewhere between 0.1 and 0.3% for any ETFs you buy on their platform, but those charges are for the ETFs and not actually with the platform, so I'm discounting those for the purposes of this video. The ETFs would carry the same fees no matter where you buy them, whether that was Trading 212, Free Trade or anywhere, so from that point of view the costs for the ETFs themselves are largely irrelevant. As for Trading 212, they are offering a free share up to the value of £100 when you open an account. If you're interested in doing such a thing, I do have a link below and I would encourage you to use that if you're interested in starting a Trading 212 account. The Invest and the Invest ISA parts of the application are entirely free. There are no costs to use that whatsoever. And so if they're offering so much good stuff free of charge, how are they actually making money? Well, that is through the CFD portion of their application. Every time someone is trading on CFDs, then this company who are offering such a product are going to be making a little bit of money on the spread between the buy and the sell. And since most people are long-term losers in the CFD game, I think on Trading 212 it's at 76% of people will lose money on CFDs. I suspect that this is how they are funding their free offerings on the rest of the app. I'm guessing Trading 212 are offering these nice free shares and all these free facilities as a bit of a sweetener to hope that you'll maybe make the move over to CFDs. Well, as far as I'm concerned, they're barking up the wrong tree because I won't go anywhere near those things. But it does seem that their free services, their free offerings on this app kind of depend on the continuation of other people kind of getting suckered into using CFDs and losing a bit of money there to prop up the rest of their operation. In saying that, they have been profitable for years, so it's still working for them and probably isn't really a concern in terms of the longevity of the application. It's also fair to say that they are regulated and backed by the FCFS in the same way that Vanguard is, so your investments will be protected up to £85,000. When I actually asked them this direct question, what will happen if you go bankrupt? They basically told me that if the company ever went bust, you would see all your shares liquidated at the last available trading price and the cash that you have would be backed by the FSCS up to £85,000. So what about service and availability? Well, let's start again with Vanguard. Vanguard website is great. It's clear, it's got stacks of info and it's speedy. It's got lots of cool info on how your investments are going and the customer service is pretty great. I've never attempted buying ETFs in real time though, so I can't really comment there, but certainly orders that I have placed have been fulfilled when they've been scheduled, which is typically the next day, and they have never let me down in terms of something falling through. As mentioned before, the service in Vanguard's platform really revolves around Vanguard's own products. They are very good products in saying that. They offer a range of products for different risk appetites, but they do lack as wide a range of options as their competitors do. And this could be considered a good thing because you have less options. They're all good options, so generally people can spend a lot of time poring over options that they maybe don't fully understand. This lets you get investing with a very low barrier to entry. And very often, of course, the simplest methods for investing are the best. Trading 212, however, have been suffering some outages recently. They're putting it down to an unprecedented demand to get involved in investing. Very recently, there's also been the GameStop and the AMC trading debacles, and you can read about that, you can see about that in other videos. I'm not going to go into it in this one, but it's certainly been causing problems for retail investors across the globe using the likes of Trading 212, Robinhood. They're certainly not alone with their problems, but when you're seeking to make a serious dent in the marketplace, this is not a good look. Short periods of downtime wouldn't particularly bother me since I'm a sort of buy and hold long-term investor, but you know, it doesn't fill you with confidence that the whole thing's going to hold up, maybe at a critical time when you might need it. So where exactly do I land on this? Well, if you were choosing which platform you wanted to invest with, I think the biggest thing is going to be whether or not you want to invest in individual stocks and shares. If you do, then Vanguard isn't for you. There are plenty of other opportunities for you out there other than Trading 212, but Trading 212 certainly offers a broad range of stocks and shares on an international level and a lot of ETFs to choose from as well. Trading 212 will offer most of what Vanguard are offering, but they will not have, at this point in time anyway, they don't have the life strategy funds, which are very popular. And of course, Vanguard only offers Vanguard products. The next thing is they're both regulated by the Financial Conduct Authority and they're backed by the FSCS £85,000 scheme. So there isn't much to choose between them there. In terms of reliability and so forth, I think Vanguard at this point in time is going to shade it for me. I think Vanguard probably has a more reliable business model. Their fees are very low, but they're operating at such a scale that they must be making plenty of money out of this. I'm still not entirely comfortable that free options on Trading 212 appear to come entirely from their CFD operations. If that was to change, you could probably expect to see some prices slowly make their way into Trading 212, some costs and expenses for regular investors like you and I. Probably the way I'm going to go here is eventually move all my assets in Vanguard into Trading 212 and have Trading 212 as my main ISA account. Not because I'm particularly looking to get out of Vanguard, it's just that I'm increasing my holdings in clean energy ETFs, electric vehicle ETFs, and since I can get everything that I'm currently investing in Vanguard available in Trading 212, then I might as well see the tax benefits on all the other investments that I have as well. In saying that, I haven't made any moves yet. I'm going to see how this business in the next couple of weeks pans out with GameStop and AMC and how Trading 212 are going to treat their customers as we go forward. I'm going to have a look and see how the outages play out and just generally keep my ear to the ground to see how all this stuff's going on. So that's my overview of Trading 212 versus Vanguard. If you have found it useful, please consider subscribing. Please leave a like on the video. It will help this channel tremendously. As ever, folks, thank you very much for watching, and I will see you in the next one.